This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Saudi Arabia, the world's biggest oil exporter, kept its ranking as China's top crude supplier for a ninth straight month in August as major producers relaxed production cuts. Saudi oil arrivals surged 53% from a year earlier to 8.06 million tons, or 1.96 million barrels per day, BPD, data from the General Administration of Customs showed on Monday. That compares with 1.58 million barrels of oil per day in July and 1.24 million barrels of oil per day in August last year. The Organization of the Petroleum Exporting Countries, OPEC, and its allies, known as OPEC+, decided in July to ease production cuts and increase supply by a further 2 million barrels of oil per day, adding 0.4 million barrels of oil per day a month from August until December. In July, OPEC output increased by 640,000 barrels of oil per day to 26.66 million barrels of oil per day.
Oil prices fell 1% on Monday as investors grew more risk-averse, which hurt stock markets and boosted the US dollar, but oil drew support from signs that some US Gulf output will stay offline for months due to storm damage. Brent crude fell 82 cents, or 1.1%, to $74.52 a barrel by 11:31 a.m. Eastern Time, 15:31 GMT, off the session low of $73.58. U.S. West Texas Intermediate (WTI) declined 98 cents, or 1.4%, to $70.99. The dollar, seen as a safe haven, rose as worries about Chinese property developer Evergrande's solvency spooked equity markets and investors braced for the Federal Reserve to take another step toward tapering this week.
Moving on to the top news in the energy sector.
Soaring gas prices that threaten to push up winter fuel bills, hurt consumption and exacerbate a near-term spike in inflation are another blow to a world economy just getting back on its feet after the coronavirus shock. The gas market chaos, which has driven prices 280% higher in Europe this year and led to a 100% plus surge in the United States, is being blamed on a range of factors from low storage levels to carbon prices to reduced Russian supplies. So high tensions that several European Parliament lawmakers have demanded an investigation into what they said could be market manipulation by Russia's Gazprom.
China's exports of clean marine bunker, or very low sulfur fuel oil, VLSFO, dipped 2% in August from a year-ago period, customs data showed on Monday. August exports of the shipping fuel, which has a maximum sulfur content of 0.5% to comply with emission rules set by the International Maritime Organization, IMO, were at 1.59 million tons, compared with 1.77 million tons in the prior month, General Administration of Customs data showed. Exports during January-August rose 42% to 13.12 million tons. Next, we have the top news in metal markets. China's aluminium imports in August fell 20.7% from the previous month. Data from the General Administration of Customs showed on Saturday, hitting their lowest since May. Arrivals of unwrought aluminium and products, which include primary metal and unwrought, alloyed aluminium, were 247,547 tons, down from 312,086 tons in July and down 42.4% from a year earlier. In August last year, imports hit the second highest on record as the COVID-19 pandemic upended trade flows and a price arbitrage made it cheaper for domestic buyers to source overseas metal.
Russian officials expect new taxes on producers of steel, coal and iron ore to add an additional 130 billion rubles, $1.8 billion, to the state budget in 2022, four sources familiar with the ongoing discussions told Reuters. Moscow is considering imposing a mineral extraction tax, MET, linked to global prices on producers of ferrous metals and fertilizers, as well as on ore mined by Nornickel, sources said last week. The new tax is expected to raise an additional 10 billion rubles from fertilizer producers, three of the sources said. For Nornickel, the new tax will cost an extra 20 to 25 billion rubles, one of the sources added.
We will now look at the top news in the agricultural sector.
The European Union's crop monitoring unit MARS on Monday lowered its yield forecast for spring barley and maize due to the negative impact of sustained hot and dry conditions in southern Europe. The conditions affected large parts of Italy, Hungary, Romania, Bulgaria and Greece, as well as in southern Turkey, MARS said. Meanwhile, the summer crop yield forecasts in Western and Central Europe remained positive, benefiting from a slight upwards revision due to higher than average rainfall, it said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.